Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And notice I said $1 million in annual revenue. I didn't say anything about funding. Of course, we work with hundreds of investors and help people get funded, but we have a very strong commitment also to bootstrap startups, and that works into the mission. I don't believe we can fund 1 million companies, but I believe 1 million companies can reach $1 million in annual revenue. This is the 564th free mentoring roundtable. We have started doing this way back when in 2008, and it's been going pretty much on a weekly basis with very few gaps. In a given year, we probably have 45 to 48 roundtables. So it's been a massive, massive amount of work that we have done here. And we also have every week behind the scenes the premium roundtables where we do mentoring for our premium members. So this mode of mentoring, online mentoring, has become very standard and very, very expensive. Recordings of the free roundtables are all available on the YouTube channel 1M1M Roundtables. And we have, on Twitter, we're at 1M1M and at Stromana. Hashtag for today is 1M1M. These are the call-in instructions, audio bridge. Your computer audio is also going to work. So when we're ready for Q&A, please use one or the other. I'll put the slide back up. It is a roundtable, not a broadcast. We want you to participate. Today, we're going to start the session with a conversation with Rahul Chandra, Managing Director at Arkam Ventures. Welcome, Rahul, to the show.
Thanks, Shavana. Good to be here. Thanks for having me.
Rahul, you were with Ashish at Hillion at the very beginning, right? So you've been at the Indian venture capital scene and problem, solving an Indian venture capital problem for a long, long time, yeah?
Absolutely. In fact, even earlier than that, the first ever India dedicated fund that was done by Walden, 1998. So that was a good 6 years before, or 8 years before Helion happened.
Okay. I had forgotten about that. Somnath and Bhutan, right?
Correct. Yeah, absolutely.
Yeah. Okay. Well, in that case, why don't we start with a bit of a historical view of the Indian venture capital ecosystem. You have had a long view, and can you take us through what you think were the major milestones in that evolution, and then we'll come to the specifics of Arkam Ventures.
Sure, Shmana. My pleasure. So I think the cycles of venture capital in India have been notably three, and the early ones are almost now insignificant in comparison. So 2000, when the dot-com happened in the US, there was a quick formation of smaller funds in India. Early dot-com entrepreneurs came out, including Naukri, Rediff, and others. And then 2006 is really when Nexus, Matrix, Helion came about with the backing of US long-term LPs. And these were long-term LPs because there were many endowments. So for the first time, quality backing came for GPs who could now look at backing companies for a longer time with bigger funds. So the fund sizes were on an average 150. And then barring the, I would say the other notable change in India was obviously the whole chicken and egg problem of the device and access to any computing with consumers, and that happened in 2011. But of course, there was no data to go along with it. And VCs were struggling for themes which were growing at exponential rates. There were very few ideas which were tech backed. So there were a couple of VCs who came from the valley thinking Indian consumers are now are ready to go prime time, but things were still quite slow. And then I think things really started changing with Geo. So the real onboarding, and we started seeing all these numbers from our own portfolio companies, which started showing user growths in the millions compared to the hundreds and thousands. And that's really when things started becoming very interesting. And of course, post that they've been, the landscape is much larger funds, dedicated Indian global funds or global funds raising dedicated funds for India. And this was also is a phase that where we are currently, where a lot of the founders have gone through much more, I would say, accelerated learning than they have ever gone in the past because of the very high velocity funding, exit, and growth learnings that have started percolating very quickly now in the last 4 5 years, which has given, it's almost like giving urea or some nice fertilizer to good land, but which was not really sprouting anything. So suddenly things are like sprouting all over. So it's 10 years to get to 4 unicorns, and 1 year to get to 45. So it's just mind numbing what's happening.
Yes. So I will come back to the unicorn question in a moment. I think 45 unicorns in 1 year is absurd, and that's that's also happening because of financial engineering, not necessarily very strong business building. So that one is a bit of a bubble froth situation because of certain funds behaving in a certain way. But I think some of the learnings on our side that come alongside your learning from the venture side is also, what is working, what is scaling. And, that first phase that you talked about, it was India facing B2C, right? The Naukri and the Make My Trip and stuff like that was mainly India facing B2C. Mm-hmm. For us, I think the SaaS wave has been, global SaaS, global tech wave has been very, very productive. Freshworks came out of in 2011. There was kind of that, Dhruva. These are the beginning of that early product company, but that was with a global market in view. Mm-hmm. And I think that trend has taken good hold, right? There's a lot of Indian companies coming out with global ambitions and global go-to-market strategies. So that's one, and that's getting funding not just from India, but also from the Valley and elsewhere. Mm-hmm. So that's been a very healthy growth development. The India-facing consumer business has continued to be a big factor. The one that took a while, but I think it's starting to also gain some momentum is the Indian SME-facing mm-hmm. business applications and business services. Right. Because the sales cycles were very, very slow, and that is starting to accelerate, and I think it's starting to get a bit more traction. And then fintech, India-facing fintech, India-facing health tech, India-facing insurtech, all of those are now starting to gain ground. And this crop of unicorns that you are describing, the 45 in 1 year, we just did in January, we did like a big overview of, I think, 20 Indian unicorns. We did a full analysis of 20 Indian unicorns. And there were a few that I thought were not overvalued. But by and large, these unicorns have to backfill their valuations. Mm-hmm. These are not reasonable valuations. I mean, you have on one hand a public company, which is a comparable at a certain valuation, and the Indian unicorn is valued at higher than that. This is not a reasonable, comparable. So you have to somehow backfill that valuation. That's a slippery slope to go down. so let's come to Arkam Ventures. You are a veteran of the business, so tell me how you're positioning your fund. What is the investment thesis? How big is the fund, and how do you propose to take this forward in this new era?
Yeah, sure, Shmana. So Arkam is dedicated towards finding, the right companies in markets which are disrupting the old uh, structures of certain markets. These companies serve consumers in Middle India, which is 5 to 25 lakhs in annual household income. There is a affordability question here, but in reality, this is more of a ease of payment. Now, I'll give you an example. So, mostly the banking structures in developed markets and developing markets are built with the same design for a few consumers, and every new consumer beyond, let's say, 30, 40, 50 million is going to actually put pressure on the bottom line rather than than be a lower marginal cost despite such scale. And this is because the structures have been designed to cater to smaller markets and smaller countries, or a small population of well-to-do people. And for example, in India, obviously there are 400 million people, 450 million on UPI now, using electronic payments. And obviously this structure is not going to work. So there is a complete unbundling of the banking system from savings to investments and fixed deposits, everything, including inter-country transfers. Today, I heard someone talking about solving the challenges with making global transfers out of India. So the reason really is simple. It is that the traditional banking system has created a massive gap in service quality and response times and success rates, and it just leaves a fantastic opportunity for a tech-first solution to come in. And it's blowing the customer experience out of the water. So I'll give you one of Arkam companies example. So we are now 11 company strong in terms of our portfolio. And one of our companies recently that we invested in September is called JAR. And there was a very big question about, hey, is the segment that JAR is targeting is that 450 million UPI users, for whom investing is actually just a dream. They think investing needs significant capital saved in the bank or under the mattress, and which they don't have. And for us also, the question was, India is a credit hungry market. Are people even thinking about saving? But we took that chance with JAR, and JAR has built a product which allows you to download the app, open it, do a login, come out in 45 seconds with even 1 rupee saved in digital gold. And gold is a $2.5 trillion value of what's just in Indian households. It's one of the most go-to saving asset class in India and in many other parts of the world. So JAR married these two concepts, which is lower, what is an investment in the form of a saving which has some value. So it's not just money under the mattress. It's in gold, but it's in digital gold. And the transaction is super friction-free, very quick in out, and it's almost like make saving so simple and so smooth that people just feel great about doing it, and very quickly it becomes a habit, and people are moving towards financial well-being. And these guys were at about 20,000 users when we went in. Currently have 5 million users in 3 plus 2 5 months. So the the opportunity we really hit out of the park with JAR is that there is a very big latent demand for a high quality consumer friendly product which can help you go down the path of savings and investment, which nobody had figured out earlier, because it just looked that India is not ready for it. So so this is a great example of taking a very complex back-end product, putting the scale or scalability aspects into that by, let's say in this case, digital gold, and then creating a very simple interface for a new first-time user to experience something. And
Okay.
the results are just fantastic. So I think democratizing complex products for the masses in India is really a theme that we are chasing at Arkham.
Mm-hmm. So how big is your fund, Arkam Ventures?
So we closed $100 million fund in January. We did our final close.
And what stage are you going to be focusing on, or are you focusing on in the 11 that you've invested in? What is your stage thesis?
So our stage um, is a mix of pre-series A and some series B. So somewhere in that. And in general, our sweet spot is a $1 to $3 million check, first check. We are multi round, so we reserve about 2x of our first check for follow-on investing. And we usually come into companies which are post-product, and in some cases, some
In
on
revenue.
yeah.
Yeah. Okay. And the investment thesis that you started with was middle India consumers. Is that across the fund's investment thesis?
Yes, absolutely. I think we think that's a very deep market. 80-90% of the wallet share goes into 5 areas. We're just touching the surface. Those 5 areas are fintech, health tech, agri-food, mobility, and education. And education typically, I'm looking at a company which caters to children in households who find, let's say, a white hat to be a very high price point, but they all want to learn coding, and this is millions of kids. Um, so this is one example. The other would be where employability, of course, in India is a massive challenge. A lot of graduates, but don't end up finding jobs. So what's that gap in the middle? So for education, those are some of our themes: affordable education and employability. And yeah, they're absolutely big priority areas for middle India, not middle class, but middle India, which is what I said, sub 25 lakhs household income. And one of our first investment was in a company called Jai Kisan, which is doing rural finance using technology. Just after the first COVID wave, and again there was a big question whether it's going to get impacted or how will farmers repay. And it was incredible that the loan quality, the demand side, the absolutely smooth and no disruptions during COVID, for a very simple reason that it's food. At the end of the day, everybody made sure that those supply chains are working. So as a result, what was a priority sector selection for us for middle India consumers became a very resilient sector during something as disruptive as COVID, because it's just important for everyone, I think. And again, when you choose middle India, you're choosing by default sectors which are incredibly important for a very large part of the population, and hence, there is a lot of support and stability in those sectors.
Mm-hmm. And what are you learning from a go-to-market strategy point of view? What this middle India consumers, where are they reachable? Are they reachable on Google? Are they reachable on Facebook? Are they reachable on WhatsApp? How do you reach them?
So clearly WhatsApp, big channel, but also a lot of the short video format apps, which are like Moj, or MK Takatak, which just merged with, which was bought recently. But this all put together, short video format, sum total of all the audience in the 3-4 top apps is now what TikTok used to be before they left. And so it's it's a very wide audience. About 350 million Indians are spending time on that. So that's one big channel. But
and it's converting. This audience, this channel is converting.
Oh yeah. There is some, again, very interesting derivatives from this. What used to be complete time pass activity is now creating millions of creators. Many of them are working on promoting certain products. Um, some of them are teaching. Obviously there are some bad elements where a speculative investment asset is advertised. This is not regulated. But by and large, there is a lot of productive use now where education or just small entrepreneurs are benefiting from just this access that these channels are providing.
Interesting. And talk about how many of those 11 investments that you've made so far are in ed tech?
Just one so far.
You want to talk about that?
We have not announced this one, but I can talk about the construct.
Sure.
It's going to come out soon. So the premise is very similar to what I'd said, which is there is a very two-dimensional, non-interactive nature with online classes. Now, online classes is an outcome of COVID, of course, with colleges and schools shutting down. And the best possible solution at that point, which was a video class, one to many, very little interaction, sit at home and study. That came about as a result of a disruptive event. Obviously, it's not the best solution, but it still plays to the point that education in India requires a scale solution. There are just way too many topics to be covered to improve employability, for people to learn certain skills, and schools and colleges are just not enough to do that because of the same age-old limitation of experiential learning, ability to prove your or showcase your learning through project works, and and just learning through peer, which was possible in a school or a physical college, is just not possible in a Zoom experience. So this company actually is looking to just design the whole education experience, but targeting it at the post college employability gap.
Mm-hmm. Interesting. And in something like that, what is the go-to-market strategy that works? Is that still through this kind of advertising that you were just talking about, or are there other channels?
Oh, interesting you asked. So, digital or education in India, digital education in India has kind of evolved with some kind of a hammer of hard sell, and it's aggressive selling in some cases. Now, we are also again betting on that nature of education selling to convert into a pull, um, where students actually
Mm-hmm.
want to go through this experience. I think that's a big bet, but we are betting on it, that the way digital education has been sold needs to be turned on its head, where education regains its original value and respect versus becoming something that you end up doing because your parents were conned into paying for it. So it's a very high, it's a expectation of a very high NPS, very strong engagement by the student because they actually want to do this, and there is a tangible value that comes out of it. So the end result obviously is going to be how many people get employed, and that has a very strong feedback loop. But the there is no hard sell, at least in the go to market. I think there will be, what you can say, awareness creation, but there won't be people calling you 3 times a day to have you buy something. There will be an ease of payment, but that will not become the path to selling. Um, a cost of education is, yeah.
One
Yeah.
of the my observations is that there are all these schools. There are like colleges in every corner of India, right? Engineering colleges and various kinds of colleges, and they are graduating huge numbers of people, and that's where the employability gap often is.
Mhm.
So, is there a way to leverage these colleges and, make them better at what they're supposed to be doing?
Yeah, so again, if this environment is um, what can be created, which is an ability to do some of the things I mentioned, um, then this is eventually intended to be a platform in which colleges can come and just give a better experience around learning. I think um, what is common to most edtech in India, the parts which are working well is cohort-based learning. So you um, take batches, but you do it not every year or every semester, but you take every 2 months, 1 month, and you can improve your delivery with every cohort. And also, you can manage the cohort much better because you can track how that cohort is moving with a maximum completion rates that is being goaded by mentors and and people who are motivating these students to keep moving. So I think there are a lot of best practices now in edtech, um, which can be translated to a much better experience.
Interesting. Um, I guess my last question to wrap up is, how do you feel about what's happening with this unicorns? Is this something that, so for example, these 11 companies that you have created, that you have invested in, not created, you have invested in, how do you feel about these companies going this route? If like a Tiger or SoftBank comes in with this, yeah, we want to flush these companies with capital and turn them into unicorns. You can turn anything into a unicorn by slapping a bunch of liquidation preferences, a bunch of money, and put a unicorn valuation. How do you feel about your companies going in that direction?
I think first of all, there are very few people who are in this mix of um, taking companies to a limitless pool of capital. Their ability to give a company a path to basically forgetting about capital constraint. There are not that many investors. It seems like a lot of capital, but they're the same set of people who would. Now, I think there is
Right.
a very strong method to this, what looks like madness. There is, um, and again, the perception can be that anyone and everyone is getting it, but in general, what at least I'm seeing is that there is a very strong selection criteria. Um, but the criteria has a lot to do with growth. Right? The growth is a big factor, and in my previous life, I've mm, been part of a, let's say, a microfinance investment cap table. And again, there were questions, hey, this is microfinance, it has some mission, and private equity players have gone in and they're going to spoil everything. And my response really is that in India, if you're not doing things with the right scale, then it's not going to mean anything. It's just not going to have enough impact. So a company that can have, and in some ways, I think it's a lot like how impact investors invest, which is you do not expect, the very sane financial metrics to come too soon. You give companies time to go and give, and to build something first and then come back and give that. In that interim, of course, things look very crazy because they are valued richly even then. But what I'm seeing companies do is they're right now, even in our own portfolio, we have two sets of companies. One is the market creators who are doing absolutely new market creation, like a small case, which is an
Yeah.
alternative to mutual funds. I mean, it's the vanguard of India. And the other set, which is the market enabler companies. So creators and enablers, and both have an equal chance of having very high outcomes and unicorn numbers. But we feel that the creators, of course, need to make sense to millions and millions, and that growth is 1 million to 10 million, 10 million to 50 million. And I am seeing enough evidence that once you have a critical mass, you have enough data, then companies are able to, ramp in a very delayed but in a hockey stick fashion on the revenue. So it is interesting how, it still needs the right execution, but you look like you have, very non-commensurate revenue to your valuation, and then suddenly, whoop, there is a big hockey stick of revenue growth. So it's happening that the revenue just catches up super quickly.
Yeah, so that was kind of my observation when we did the 20 Indian unicorn analysis. Is that investment thesis is growth, and investment thesis is very large TAM, and basically figuring out what is the customer acquisition path and then flushing that path with capital so that that kind of hockey stick happens. That's exactly what my observation was. And what do you think the space of, so there's two constraints, right, on whether we can build these kinds of very large scale companies rapidly. One is on the investment side, there are constraints. There are not that many, as you pointed out, there are not that many players who can play these games. And on the other side, there are not that many companies that can play this game either. So we have 45 unicorns in 1 year, but is this a sustainable pace? What is your read?
Yeah, I think the excitement really is how many large, deep problems India has, as opportunities to be solved. And at the end of the day, there is, it's certainly not the most perfect valuation. It's at the end of the day, private valuation with an estimate of future growth, which is humongous. India has the numbers, the consumer demand, and now, people who are increasingly delivering on this delayed monetization of growth combination. So I think 45 was a pent up number, which kind of just happened in a high growth year. I think everything was moving. But is there enough pipeline to keep doing this? Maybe not at the same pace, but at, let's say, 50 to 70% every year. I think there are plenty of companies in the pipeline which have that potential. And again, this is yeah. Go ahead.
What is your prognosis of the other form of building businesses, which is the more fundamentals focused, relatively speaking, more conservative, more, okay, you build businesses, you grow those businesses with modest amounts of capital or limited amounts of capital, and there are a lot more investors who can play that game. That's not a constraint at the moment. There's a lot of capital in the system.
Yeah.
So are you seeing entrepreneurs getting distracted or confused by the trends of this like excessive numbers of unicorns, and if they don't become one of them, they consider themselves failures, or do they have their head straight in that there is another way of succeeding as well?
I mean, pragmatically, I see it like it is creating FOMO and hence ulcers for people who are always worried that I am going to now have a much harder time growing. I think the kind of markets where growth is necessary to be meaningful, generally winner take all, strong network effects are identified. I think those clearly need big checks, and they're building it slow or steadily, I think is tougher. But I think it's also the kind of entrepreneur. I think there are some who need to deliver on longer time to competitive moats, build a more differentiated product where the product actually is not not an app which can't be replicated. It is something like a artificial tissue or synthetic tissue company which needs ton of research and testing before it can go out. So there are plenty of solutions like that which are being worked upon where capital is not going to make a difference. It is just the successful outcome of the product that and not everybody can. So I think there again is there are different themes which are getting backed, but those are just different founders who are building the moat differently. So you don't get a growth moat, you get a product moat, and that is a little bit of delayed gratification in terms of investor valuation and eventual outcomes. But here, these are like your Diwali rockets, right? They go up, and those are the Cherkis. So rockets go up very quickly, but you don't know where they'll land. So there's always a question till that eventual monetization starts picking up steam.
The other comment you made about winner takes it all companies, there are certain sectors where winner takes it all is the dynamic. But I think in fintech and edtech, there are, and in health tech also, these are not necessarily winner takes it all markets, right? We have so many banks. Banking is not a winner takes it all business. There are credit unions and there are JP Morgans and Goldman Sachs.
Yeah.
EdTech is definitely not a winner takes it all business.
Right.
There are all these tutoring companies and local tutors and so on and so forth. And then, of course, health tech has so many different kinds of hospitals. I was looking at one of the unicorns that is creating surgery infrastructure in tier 2, tier 3 towns. Well, great. It's a fantastic mission.
Yeah.
But that doesn't mean that all the existing surgery infrastructure is not going to go away.
Yeah, but the way I see it is that winner takes it all really means winner takes all the cash. So, so there is a massive concentration of capital that happens with a potential winner, which means that now this company can afford to, just offer better terms and run at a much more non-sustainable way than the others have to worry about. And it's a question of just suddenly your competitor has a V8 engine and you're just going fut, and who's going to get so then you need to have that mindset of stamina, marathon, and just keep going and and keep the FOMO out. So it's very strenuous, I think, for founders when they keep hearing this constant chatter of this guy got funded, that company got funded, etc. It needs a lot of, I think, believe in yourself to just keep going. Absolutely, there is no finish line happening anytime soon for anyone, but it is tough in these environments for people to keep their focus on.
Yeah. I'm a big fan, as you know, of bootstrap companies, and in some ways, actually, it's easier for a bootstrap company to deal with that situation than a mid-scale funded companies. Right. Because if you're on the funding track and you're not getting the funding somebody else is, that's very distracting. Whereas if you're a bootstrap company, you've decided that I'm not going to go for that kind of, that mode of growth, I'm going to do it differently, then the chatter is less distracting.
Yes, absolutely. And that decision just needs to be made upfront, because what I've seen is that, you see, or you kind of get cornered into a certain business model, which is mirroring the other company. Yeah. And basically, now you've started building a low margin, high burn business just because you think you got to compete, because somebody else is challenging you to it. And then that somebody gets, the much bigger check than you, and you have this high burn business and you don't know why you made it. But in the hope
and you can't attract the capital. That's a very slippery.
Yeah, absolutely. So, then you're going to go hit a wall, and the other company which got the funding. So it has to be made very preemptively that, either going to look like that high burn company or not. So if you start looking, then you better get that check in.
Very good. Wonderful conversation, Rahul. Thank you very much. I don't know if you have time to
and congratulations on what, 564th episode of 1M.
What was that?
Yeah. That's it. Congratulations.
Oh, you mean how many roundtables? Yeah.
Fantastic.
So it's been going on for a long time.
And looks like a lovely day in Bay Area. So enjoy the rest of the day.
So wonderful day in the Bay Area. Absolutely. Yeah. Thank you for being here, Rahul.
Thank you. Thanks for having me. Bye-bye.
Bye. Folks, we're going to switch to the entrepreneur pitch section of today's session. Just a little bit of expectation setting, whether you're presenting today or on a later date. This is a safe working session. You can discuss anything you want input on, and I will try to be helpful. You can disagree with me. It's your venture. You will do what you like. We are going to start with Ashwini Padiyar from Lumenasia. Lumenasia? How do you say this?
Ashwini, please unmute.
Lumenasia?
Yeah. Can you hear me now? Yes, it's Lumenasia.
Go ahead.
Can you hear me now? Hi, Shramana.
Yes,
how are you doing?
Good.
Go
ahead.
Okay, so Lumenasia, let me just begin. Can we have the first slide, please?
Your first slide is up.
Second one. Yeah. Okay, so to begin with, we are a recruitment consultancy operating in the Indian lighting industry since 2011. We were doing recruitment only for the lighting segment. So most of our clients were these lighting industries operating in India. Now, due to COVID, there were a lot of talent loss. There were a lot of, layoffs that have been hit across segments, not just lighting, but across segments. And that was the case with Indian lighting industry as well. A pool of talents was laid off because, most of the companies wanted sales but couldn't, finance the sales force. So we had this pool of database with us, who would ideally question us, what next, right? And we came up with this concept of sales rep organization, sales representative firm, which is one of the things that's happening in Americas and Europe. So we thought, why not replicate the same thing to the Indian lighting industry? And we went ahead with the database we had. We spoke to a few industry veterans, and they seemed to be interested in this concept where, rather than having, a person working for a manufacturer, why not, look at it from another perspective of having a manufacturer's rep. And this came this concept of, the sales organization. We started, pulling in all these people who looked at it just not from a perspective of being an employer to a manufacturer, but somebody who could go ahead and be an entrepreneur all by himself or herself. And this is when, we got good response from one side. That is, we were able to build, people with common interest. We approached the brands and we could understand that the brands also had pain points. Some of the big companies did have a pain point. They were not present all across India. Now you being an Indian, you must be knowing so many pin codes in India. So a brand would not be able to hire, everywhere, a sales person who could represent or take the brand ahead. So this ideally what we did is we since we had this pool of candidates, these industry veterans, lighting consultants, we approached the brands initially to get their review, and they were overwhelmed with this particular concept. Hence, we thought, how we should be different. Rather than a representative representing only one brand, what we did is we took the best brands out of the industry. That's segmented. Like, when you look at the lighting industry, you have something like outdoor lighting, you have facade, you have indoor lighting. For example, let's take an example of a hotel. What happens here is, you have a different set of lighting for the hotel rooms. You have a different kind of lighting for the facade of the hotel. You have a different type of lighting for, the garden in the hotel. So what happens here, every manufacturer cannot be a top player in all these segments, right? So how we differentiated is for every segment, we chose one such brand who was a key player, right? So what happens here, when you pull in about 3 to 4, 5, 6 such brands together, you end up becoming one strong brand. So, our rep will be having, one such brand, which is a combination of multi-brands, multi-segmented brands. So we started off, we spoke to these brands, they were overwhelmed, and we chose 14 such brands into our kitty, and started promoting this model in the market, trying to tap the customers. Can we move to the next slide, Maureen? Yeah. So here, our target set of customers would be the ones, these hotels, malls, monuments, wherein, the outdoor lighting plays a very important role. The outdoor lighting as in the facade lighting. Um, and then the second line would be the indoor hospitality, which complements the one like outdoor lighting. So here the problem identified for the end customer was non-availability of one-stop lighting. So when a project is coming up, you just go to one brand and finalize that brand based on negotiation. But if my rep were to offer you the best of all the segments, it becomes a one-stop lighting solution provider, right?
Okay.
So the projects, I mean, the end customer would get one-stop lighting solution from the best of the leaders in the segment, and then local touch point. Having these reps is like, you have a sales point just next to you. Every pin code, one rep would be like, ideally like it's just a call away. The customer doesn't have to then call up the manufacturer, wait for them to respond, or call up the distributor, and then, they take their own sweet time to come over. Here the rep is just right next to you, and at any point in time he can come to you. So that's a local touch point strategy that we adopted. And of course the credit when it comes to the end customer. And for the brands, it's the high sales count which we are looking at reduction, because you don't have to invest on every rep at all, right? The rep works for you, and these are all the industry veterans working for you, which gives a different kind of a brand value. When a senior rep talks about the brand, it's like a promotion to the brand. It's like a free promotion to the brand rather. Next slide, please, Maureen. So these were the problems that were identified basically for our brands and for the end customer, and we came up with this rep model so that we could solve the problems at both the ends. Now here, what exactly our reps do is, of course, in their locality, they generate the inquiry, they do a brand positioning in such a way that, the end customer is made aware, that he is getting the best of the segments. That is what, they do, the positioning of the brand there. And technical and the sales pitch follows, and the sales closure. So everywhere the rep completely owns this particular project, right from the pitch to the closure. And in terms of the brand, it would be a direct selling for them. They're not investing on that headcount, but still able to get projects at various at once from various locations. And demand aggregation, the brands will be able to do a better demand aggregation through this particular model. And as and when you're upskilling the reps, they also become very much trained with how to make the pitch quick, how to make the pitch quick, which brand to be promoted at which project, and when they get hold and instrument, make sure they address all the pain points of the end customer. So
okay, so I think we understand your business. What are your questions? What questions do you come here with?
See, yes, I would just like to understand from your end, how do you see this model, or anywhere where there's a scope, what I could,
I'm sorry, you're cutting off. Your audio is a little bit strange. Can you repeat what your question was? Ashwini, one thing you could do is turn off the video and just interact on audio. I think you have a bandwidth problem.
Yes. Okay. Now, am I audible?
Go ahead.
Right. So, see, this is a very simple.
Yes, you are. You are.
What happened? I wanted this idea to be discussed, and if you could let me, how ideally could I scale up, or any suggestions that you would like to be giving.
what is happening right now? Are you doing business? Do you have brands and customers, brands and reps already interacting, already transacting?
And
Ashwini?
of course, not in a full scale, but yeah, can you hear me, Shramana? Hello?
Yes, your audio is a problem. Go ahead.
Hello?
Are you already, is this a business or is it a concept?
Yes, it's currently we are having 14 brands and 90 reps. Already pitched in about 100 odd projects.
Ashwini, your audio is not working. So I'm going to give you some feedback. So there are certain principles of business building that we apply that includes validation, that includes, go-to-market strategy, that includes, I think where you're coming from makes sense to me. It's not like it doesn't make sense. I think it's a question of, how big a business can you build? What are the opportunities for growth? What are the margins? I think one of the key questions here is going to be, what are the margins? And can you make a profitable, good, solid business come together within that margin? That is going to be one question you're going to have to address. What is the cost of customer acquisition? What is the cost of, would it be profitable for you as the umbrella brand, Lumenasia? And what would it be profitable for the manufacturer's reps to build businesses like this, local small businesses like this? And those numbers you have to really deeply understand so that you can, what you're doing makes sense across the board. So your core value proposition, high-level value proposition makes sense. You have these brands that want to get distribution through without having to hire these sales reps. Okay, great. Manufacturers reps is not a new concept. It has been around. What are the margins of your particular spin on it? How do you go to market? How do you build the businesses, both from a local manufacturer rep level and at your level, which is the umbrella brand. So those would be areas where I would focus on and start kind of really, granularly understanding what are those numbers, what are the mechanics, and so on. That's how you will grow the business.
Right.
Okay?
Okay. Sounds good. Here's Shramana. Thanks a ton for this. Yeah. Thank you.
You're welcome. Rajiv, you're up next.
Yes, Ramana. Hi. So, is it fine, like switching off the video and continuing with the presentation, or like do I need to?
Yes, it is fine. No, it's fine. If you have bandwidth constraints, that's the best way to take that.
So, So, Ramana, like I've been following you since last 10 years or so, I guess. In 2010, I attended the first 1Mby1M roundtable, wherein like I was actually operating in some other sector, edutech sector I was actually operating in. And later on, I actually changed my entire journey towards the energy management and renewables rather. So I've been working with a few of the larger conglomerates in solar space, solar and wind space. But now, like just to restart my journey into entrepreneurship, like I started this company, Hyperconnect, in 2020, and we have been trying to validate customer for the last 1 year. Now, like we at Hyperconnect, we want to actually target in like transforming the energy sector into a cleaner one, which can actually benefit the industry as well as a company. We can also grow along with the companies which are making savings and profits through our operations. So, considering the current pain points for the industry, we have three major pain points. most of the customers like whom we have met for the last 5 6 years, they keep on asking for a solution which actually gives them a total control over the power that they use. Like say for example, right now in India, the grid power is kind of very costly compared to other regions. So they wanted to have a solution wherein, like, say, people were adopting wind and solar as a captive generation, but uh, these two power generations are like infirm, not very like firm power they actually provide, because it actually depends on the wind velocity as well as the like the solar irradiance when the solar power plants are generating and the wind farms are generating. So now the storage, recently you must have heard of, like the storage is coming in, wherein like lithium ion batteries are used for larger storages to run the industry as well as replace the diesel gensets which the industry is using, wherein like diesel cost is very high. So this was the main pain point for the industry. Second was the freight cost. Freight cost is like more or less like if you consider India as a country, like the freight cost has increased because of the recent increase in the diesel and petrol prices, wherein like we find a replacement of low freight cost like solution through electric vehicles. And the third pain point is the power quality, because in India, like distribution of power is very infirm and more or less like very fluctuating. With the same power substations, uh, like more or more industries are actually clustered in, and like they are actually connected to the same substations, wherein like the power is transmitted, and if one of the industry causes a like increase in demand, then it becomes a problem for the other industries who are actually connected to the same substations. So, like we wanted to come up with a solution for this. So, can we actually move on to the next slide? So, like if you find the alternatives for the industries where like to have a renewable energy like wind and solar power plants installed over the premise itself, or like remotely installed, and they can actually have the power through open access. Second was to have a storage system which can actually give them a storage facility or the temporary buffering facility for the power to be stored and used, because we in India actually follow three time zones for the electricity tariffs. One is
Rajiv,
yeah,
Rajiv, I want to stop you for a moment. I've been listening to you for a little while, and I
yeah,
have no idea what is your business. And
okay,
that is not a good pitch.
yeah,
When you start a presentation,
yeah.
within 30 seconds, first, anyone listening to you must understand what is it that you're doing, who's your customer, and what is the value that you're providing. So who is your customer?
Okay, so our major customers are the manufacturing units and the power consuming units, where the loads are very high, and their stakes on the power and freight cost is very high. So we at
And
the
then
high,
what? What is your solution? Is it
yeah,
an
the
IT
solution is
solution, or what?
yeah.
To these manufacturers, are you providing some sort of an IT solution or something else? What are you providing? Battery? What are you providing?
Yeah, so basically, right now we are actually providing them a solution with electric vehicles in place. Right now, like the cost of storage is very high, power storage is very high, and more or less like if you have a freight cost, that is too high. So we wanted to
So
integrate.
again, can you answer very simply? Just follow my questions and answer in one word, maybe 3 words. Don't give me 15 minutes of explanation of the industry. I want to know, what is your business? Who is your customer? What is the business? Are you a battery provider? Are you an electric vehicle charger provider? Are you an IT solution? What the hell are you? I don't understand that. And if I don't understand that, I can't work with you.
Yeah, so basically we are the electric vehicle charger manufacturers as well as the provider for the services related to the electric vehicles for the industry. So,
Okay.
like if you like
Why
completely
do you
easily
have all
understand.
these blah, blah, blah slides here? Why
Yeah.
don't you have a simple slide that says, we are an electric vehicle charger provider? Why do you have this motherhood and apple pie big thing? Are we going to change this problem, that solve problem, that problem? People
Yeah.
don't take you
Ramana,
credibly.
we see, like there are enormous number of EV charger providers in India, and more or less like there are companies who are also providing electric vehicles to the market. But there is none of the companies are actually providing the end-to-end solution related to the electric vehicles and the chargers also. In India right now, the problem which actually arises is like we have a single use of the charger and single use of the electric vehicles, but we want to reform it in order to use electric vehicle as a battery packs, a portable battery packs which can be used across the industry to the power of the industries as well as to improve the power quality of the industries. So for that, actually, we have a hybrid solution wherein like we are actually manufacturing equipments and we are also providing solutions to the industry. So like we are actually going to like introduce our V2G chargers, wherein like the power can be used to charge up the batteries, and even these batteries can actually power up the industries. So this is the
So
concept of V2G EV chargers.
So this presentation doesn't work. This presentation needs a lot of work. That is one issue that I have with this. Secondly, we are an accelerator for technology, IT, information technology, and information technology enabled startups. Neither of which this presentation, I mean, what you're doing is not in our sweet spot and not in our expertise area. So I can't really help you with this. Your presentation, however, I can tell is really not working.
Okay.
You
Except it
have to,
actually we
I'll
see
tell you
we seriously
exactly the
wanted to have
sequence.
feedback. Yeah.
The sequence in which you should be pitching is that you should talk about like who is the customer, what do you do, what problem are you solving, and what is the competition, how do you differentiate with the competition, and how are you going to go to market. That's how a good, it looks like you're trying to raise money. That's how a good investor pitch works. But your sector is not one in which we work, so I don't think it's a
Yeah,
good
so
fit
that
for
was the
you to.
problem that I actually took so much of time explaining the entire situation for you. So might be there is a serious mismatch between your expectation and my deliveries here. So yeah, I'll definitely try and improve the slides in order to match the requirements of the investors. But here,
Okay.
like with these slides, actually, I wanted to explain the situation and then come back with the solution. So
Yeah,
yeah,
that's not how it works. You need to be very precise, and within 30 seconds, somebody listening to you should have a sense of what is it that you're talking about. If you take 7, 8, 10 minutes and people get to the 8, 10 minute point and they don't understand what the hell you're talking about, that is an unsuccessful pitch. It will be very hard for you to engage people if that's the situation you put yourself in. So unless you're very clear about exactly, and this is, by the way, I'm kind of using this example, but I'm talking to all of you who are building pitches. You have to be very clear, very precise, very quickly. And not, you should not have too much time going into presenting like big kind of overviews and whatnot. People don't have patience, and this is not how investors like to receive information.
okay,
Okay, good luck, Rajiv.
yeah, thank you.
You're very welcome. Folks, as you can see, I give very direct feedback and very candid feedback. So if that's something that works for you and if you like it, refer 1Mby1M to other entrepreneurs. Everything we offer is at 1Mby1M.com. You can go through the website, the entire curriculum and every single program within the 1M1M umbrella is described extensively there. There's a blog that you can start with. There's a book series that you can start with that is available on Amazon, the Entrepreneur Journey series. These roundtables happen every week. You're welcome to come to as many as you like. You can pitch for free once, but you can come and listen as many times as you want. The full acceleration program is 1M Premium, where we offer you access to the curriculum, and that's how you get the methodology, the pedagogy of the methodology. But also we do strategy consulting, like, WebEx sessions like this that are roundtables, but we work on your project, specific strategy of your project. We give you access to our Rolodex, which is an enormous Rolodex. So for business development as well as for financing, we work with hundreds of financiers. And but there is a caveat to the financing. You have to understand, if you join the program, you have to be fundable for me to introduce you to investors. And a lot of the work we do is to get a company to fundability. And without that, I think don't come into the program expecting that just by joining you would immediately be introduced to investors. There's a whole, policy of fundraising. I suggest you look at the self-assessment and ask yourselves these questions. These are questions investors are going to ask you, and you should be able to answer them. There's a bootstrapping course. It's a free course, about less than 1 hour long, that you should go through. It's our philosophy and the way we go about thinking about startups. There are a lot of Udemy courses that we have released. Those are also good starting points to go through your learning journey, depending on where you are in your cycle. 1M1M Basic is our curriculum-only option at $99 a month. You can do that, and you will learn a lot, and you can do it at your pace. So go to the website, dig around, look at the descriptions of what to expect from Premium, Basic, FAQ, Video FAQ, description of the curriculum. We are a case study-based program. We have thousands of case studies of successful entrepreneurs. Every methodology element that we use is backed up by case studies. Investor introductions, there's a whole section on the website where it gives you access to the policies for investor introductions. Our philosophy is bootstrap first, raise money later. Do not go to investors as beggars, go as kings is the mantra. And that's it, pretty much. We have one more session in February and then 4 roundtables in March. So if you need a slot, please sign up, and Maureen will make sure you have a slot. We have time for more Q&A. If you have questions, you're very welcome to ask. You can use the public chat. You can use the phone line. You can use your computer audio. All of those are fine. And while you're getting ready to ask your questions, let me introduce you to Irina Patterson, who is going to be your contact if you have questions about the 1M1M program. Irina at 1M1M.com. That is all. Anybody? Questions, comments? No? I don't see any hands up with questions. All right, well, in that case, I'm going to wrap up the session today, and I will see you next time. Good luck, everybody, and make lots of progress with your ventures. Bye-bye.